Thank you very much. I want to thank the U.S. State Department for enabling me to be here today, and want to thank our hosts here today and the sponsors of this event for also having me here. It's a great honor to be here at this first regional crowdfunding event, and excited to learn more about what's happening. And it was certainly, thank you for the update on what's happening in Slovenia as far as crowdfunding. There's certainly a lot of activity and a lot of great success, and certainly a lot to be proud of. I look forward to talking with some of the folks who've raised some of the capital that's been done so far. What I thought I could do is maybe share a little bit of perspective on what we're also seeing from a global basis. And I've been asked to also speak a little bit about the work that we did in changing the regulation and the law in the US to really sort of talk about some of our motivations, some of the painful lessons learned, some of the opportunities maybe to do it better or differently than we did, because obviously every country and every region is very different, and so it's really just about maybe some of the process lessons that we can share. Obviously you guys really understand this model, and it's something that we really help try to talk a lot about, of how this is different than the traditional model. But really the thing that we talk about with policymakers and with government officials and regulators is addressing this funding gap, addressing this space between what people can provide themselves in capital, what they can go to their parents and their brothers and sisters and immediate family members, and then what they need to actually grow that business and scale it to be effective in the marketplace, to go from being something you're doing yourself at home to being something that you actually have an office and can grow. And this funding gap is not something that occurs in Slovenia or in the region, but it occurs in every country we visited. And we've now worked in 25 countries around the world on this issue. And so this is a very real issue of how do you address this? Because banks have stopped lending to SMEs, and banks have really never lent to startups. And so it's really because it's not in their business model. And so it's up to us to create a new business model, for us to create a new way to do this. And so it's meetings like this, it's people like you that will make this change. And so I think this is really the gap that we're trying to address. This slide was from about 3 months ago. It's already out of date. There are over 700 crowdfunding platforms around the world. And also, when we look at the global growth of crowdfunding, it's pretty remarkable how the top line there with percentages is year-over-year growth in the market globally. And so we've seen last year the market, from 2012 to 2013, the market grew at 89% year-over-year growth. Last year was over $5 billion was raised globally through crowdfunding. If the rate of growth continues this year as it did in last year, that will mean we'll raise over $9 billion globally on crowdfunding. That's a lot of businesses, a lot of innovation, a lot of job creation that did not exist before. So some of the things that are happening, they're driving this innovation, you all know about them firsthand, just as I experienced them firsthand in the United States. The global economic crisis is one of the biggest reasons that crowdfunding is on the table today. It's one of the biggest reasons that we passed the Jobs Act, and crowdfunding was a part of the Jobs Act in the United States because of 10% unemployment, because of high rates of youth unemployment, because of layoffs and the fact that people were not being hired. And so it was this crisis that forced action on the part of policymakers and regulators. And so it's great to know that there is an organization about crowdfunding here in Slovenia, and I applaud the efforts of bringing the region together to be able to work together collaboratively. Obviously, each country has its own challenges, each country has its own sets of laws, but what we've seen in the other regions around the world that we've worked in Latin America, in the Middle East, in North America, the fact that when crowdfunding platforms and people who are interested in this industry work together and collaborate and share ideas and follow this sort of context of the crowd, it allows for things to move much more quickly than you might expect. I think that, I think a year ago, no one expected that there would be any public statement from, the EU about crowdfunding, and now there is. I think that's a huge step forward, and so I think we can embrace it. Some of the things that we talk about when we look at like these mega trends that really are affecting this in addition to the global financial crisis. It's this movement of our relationships and our transactions from an offline world to the online world. Nothing like Facebook has done this for us. So now we're able to, we are able to stay in touch with so many more people now, and not only stay in touch with them, but the next stage of that is not just talking with them and sharing information with them, but it's sharing transactions with them, and it's making contributions, it's making investments. And so those are those next steps that we're now taking globally. And this is the need for job creation and innovation is something that's occurring in both developed economies and developing economies. And so I think that it is countries that are in transition, countries that have this opportunity to embrace this chance, we believe have a chance to leapfrog over other more established markets, because it allows this opportunity to innovate and to take advantage of that. When we're talking with policymakers, and some of the things I want to just share with you guys is just some of the language that we use and the things that we talk about, so that you can, if it's helpful, you can adopt it. And if it's not helpful, no problem. But this way of interacting through the web, that allows us to increase our trust and the transparency we use in our communication, not only in our immediate community, but in the larger circle, this expanded community we have on the social web. What we're talking about with crowdfunding is adding a layer of infrastructure, a layer of infrastructure that allows not only communication, but transactions to flow and capital to flow between ourselves and our community. I just want to go on to this slide. There's some research work that we did for the World Bank that was issued last year. It's available on our website for free download. That looks at some of these factors. We looked at a number of countries around the world and said, what are some of the factors that are good indicators of possible success with implementing crowdfunding? Obviously, here in Slovenia, you've already demonstrated success. But one of the leading indicators is not just web access, but engagement in social media. No surprise. But that's a very important point. And so just the degree to which the population is already using social media, whatever form that is critically important. This slide it's very simple, and yet at the same time there's a fair amount of complexity here, because what we're trying to communicate is, when you're talking with policymakers, there are really four needs, four audiences that they, as policymakers and politicians, have to balance. And so by speaking to them about these four audiences, many of the decisions that they will have to make, and in the collaborative work that goes on throughout the EU, and in the policy work that's being done here in Slovenia, you'll need to think about these issues and think about what are the right policies to suggest to policymakers. First, you have to protect investors. What are the right policies that allow investors to be protected in this process? It doesn't mean you're eliminating risk from the process, because it's an investment if we're talking about debt and equity crowdfunding, and therefore there will always be risk. But it's about giving those investors a fair chance, giving them the right information they need and the tools that they need to make the best decision for themselves. It's also about saying, how do we think about, are there limits that we place on the amount of money that individuals can invest in crowdfunding each year? In the US, in talking with Congress people, their first question was, how do I make sure that my grandmother doesn't lose her life savings in crowdfunding? I can't tell you how many times I had to have that conversation. Because that's sort of the nightmare scenario. And so we had this, that we created the structure that would limit the amount of money you could invest through crowdfunding based on your income, so that people would be able to monitor that. And it was basically up to $100,000 a year in annual income. You could put up to 5% of your annual income in crowdfunding. And between $100,000 and $200,000 per year of income, you could place up to 10% of your income in crowdfunding. And so it allowed you to limit the amount of money you were putting into high-risk investments, because let's face it, startups and small businesses are high-risk investments. The second audience are capital for businesses. So you as creatives and you as startups and founders, you need a process to raise money that isn't going to take you 6 months and a stack of papers, this high. You need a process that's straightforward, that's transparent, and makes it a possible process best to do. And so again, it's balancing the needs of openness and transparency with making it easy to do. The third group is transparency for the regulator. You must provide the ability of the regulator, the financial regulator, to see what's happening on these crowdfunding platforms. It's actually in our best interest for them to see, because I believe that we can do a better job on these platforms of creating this transparency than has ever existed before. And so it's about how do we create this transparency in a way that benefits the community and that benefits all the parties. And finally, for people who build platforms, who build crowdfunding platforms, we have to have a supportive infrastructure that allows those companies the room to breathe. They need oxygen. They need the ability to grow. They need the ability to make profit. They need the ability to be successful. And so the regulation on those crowdfunding platforms has to be balanced so that it allows them to succeed. So obviously when you are making an investment, there's always risk at play. And so there's a number of different ways you can use to mitigate risk. None of them eliminate risk, but certainly we want to reduce it as much as possible. And again, it's really about providing information, access, and the opportunity for fair play. There's really these, and again, in talking with policymakers and making these changes that will be required and helping leaders of large businesses to understand why this is also in their best interest, really looking at these 4 factors. You have to have the proper economic regulation, meaning not overly burdensome. The entrepreneurial culture, which is clearly alive and well here. You need to have the community engagement and the ability to engage not just this community, but other communities. Communities of interest, communities of origin, communities of geography, and communities of diaspora. One of the things the governments are very interested in is how can we connect our diaspora communities back home? How can we deliver euros back here? And then also technology. Obviously, we have to have the platforms themselves, whether they are, whatever country they're in, it really is about creating the right platforms at the right place. I want to just go on and talk a little bit about the relevance for institutions like this, and also some different kinds of ways to think about crowdfunding as this is moving forward. First, obviously, accelerators and co-working spaces. Very obvious opportunity. This has been done here already since the very beginning. One of the things that we've seen used very effectively is using crowdfunding as a way to, as the number of people grows and it becomes, you need a screening mechanism on allowing who comes in to work in these environments. You can use crowdfunding as a ticket to get in, if you will, and to allow to say if you need to raise capital, you have this ability to raise a small amount of money to gain access to the accelerator program. We've also seen accelerators use this as a way to help startups leave the acceleration program and move on to other investment. The ability to say at the end of the acceleration program, to be able to say now we're going to help you do crowdfunding, and then this will help you to seek and find other larger investors following that. Some research that we did come from companies that had raised money from crowdfunding both in Europe and in the US. We talked to 87 companies who had been successful, and we asked them 3 questions. We said, did your sales increase after crowdfunding? The answer was yes. In some cases by 37% or more. Number 2, did you hire anyone after crowdfunding? On average, and these are companies that ranged in size from 1 employee to 10 employees. On average, they hired 2.2 employees after crowdfunding. The third question was, did you get follow-on investors? Did an angel investor or VC investor come to you and invest money? Over a third had already closed a round of investment from angel investors within the first 90 days after crowdfunding. Another 37% were already in conversations with angels and VCs. And so it demonstrates that obviously it's a very small sample size, just 87 companies, but it's interesting numbers and we want to see if this plays out in larger research. The research report, if you're interested in seeing it, it's on our website. You're welcome to download it for free. It's a very short paper, But it demonstrates that what you're doing with crowdfunding is not just raising money for today, you're demonstrating traction and success for your next round of funding. And that's really, really important, because it's really, as you move from this conversation of moving from being a creative to being a company, and if that's part of your goal, then this is a way to help do it. The last couple slides really are just looking at the size of the market. Again, this World Bank research that we did looks at different regions of the world, and in Europe and Central Asia, the market size for fund investing over the next 20 years is about $13.7 billion. And so we believe that you've had some incredible early success here, and we think it indicates it's a great indicator of the kind of success that you can have going forward. The last real thing that I wanted to really talk about was some of the lessons learned from working with people in government and other institutions, that maybe some of these lessons translate and can be helpful in your process. First, the importance of putting a stake in the ground, the importance of going to policymakers, not asking for help, but providing a solution. By saying, we, the industry, we the people from this group, are coming forward and saying, here's our proposal. Now, they can disagree with the proposal, they may hate the proposal, but they have to engage in a conversation with you. And that's really valuable. And that begins a conversation, and that can open doors. Number two, the power of showing up, the power of being with someone physically. There's no matter, I use Skype and FaceTime and all these applications, Google Hangouts all day, every day, but there's nothing that replaces being physically in the same room with someone. And so the ability to sit across a table with a regulator, with a member of parliament, with someone you can gain support from is very, very valuable. Before I started going to Washington, my background is a tech entrepreneur. I'm not a lobbyist, I'm not a lawyer, I'm not a finance expert. I'm just a tech entrepreneur. And so when I first went to Washington, I didn't know why I was going, because my assumption was no one would listen. I was going because my co-founder said we had to go. And so I went. And I was amazed at the number of people who would take meetings with us to hear about what we were talking about. Because what we led with, we didn't say we're here to talk about crowdfunding. We said we're here to talk about job creation. We're here to talk about how to increase the number of entrepreneurs in your district. And we're here to talk about how we're going to increase the amount of innovation that occurs in your district, Mr. Congressman or Mr. Senator. And it was amazing the number of times people would take meetings with us and listen. And we would then hand them our proposal and be able to engage in this conversation. So it was very beneficial. The third point is really obvious, but it took us a while to figure it out. It was sell what people are buying. And what people were buying in Washington, D.C. in 2012 was jobs, innovation, and entrepreneurship. And so that's what we talked about. Number four, staying on policy and out of politics. This have been really, really important, because I know there are many political parties here. We have just two in the United States, effectively. There's a lot of tension between the two. And during the entire process, there were many attempts to try to get us to side with one side or the other. And we resisted those, and we just sort of stayed in the middle. Because if we had gone to one side or the other, we would have been crushed. And it never would have worked. By staying in the middle and just staying on, we're here for crowdfunding, and we're standing on our principles of what we believe and what we think is right for the economy, we were able to move forward and to bring a lot of consensus along with us. Success has many fathers. Obviously, we may have started with a proposal, but obviously it took many, many, many people to get this process done. And so by being as collaborative as possible, you can get a lot done. And then finally was one of the toughest lessons for me, and I still struggle with it as an entrepreneur. We as entrepreneurs operate on a clock, and governments operate on a calendar. And it's very, very difficult, the time difference. in making a difference in making decisions that we do in minutes versus the decisions at government level that usually take months. And so what we can do, though, is by presenting the kinds of compelling arguments, compelling case studies, compelling data. Because fortunately now, you have a lot of real, incredibly valuable data. I would encourage you to look at what's going on in the UK and their crowdfunding market. There's been a report that was issued by Cambridge and UC Berkeley about the state of the UK crowdfunding market. And it shows in 3 years what's been possible with debt and equity and rewards-based crowdfunding. And I think there are other reports looking at other markets, but that one is particularly interesting from a government perspective because in 3 years, crowdfunding has been able to deliver over 470 million British pounds to 5,000 businesses. And that's pretty incredible. That's money that wouldn't have been available otherwise. And the British government has a program many of you may already know about that's pretty amazing. They became frustrated by the fact that no matter how many times they called the banks in and told them they had to lend to small businesses, and the banks then didn't lend to small businesses, they said, fine, we're going to start working with a crowdfunding platform. And they began working with Funding Circle, which is a debt-based crowdfunding platform in the UK. And they said to Funding Circle, we will take the last 20% of every loan on your platform in the following sectors. And so, meaning that if you can get the crowd to meet the first 80%, the government will fill in the last 20% of the loan. They initially created 20 million pounds for that facility. That was so successful, they've added another facility to do that again. And it continues to be very successful. And so there's an opportunity for governments to, because the challenge for government, I mean, they have a very hard job. It's like if you're sitting in government and you're trying to decide, you have this money that's allocated for innovation, and you have money that's allocated for entrepreneurs. But knowing which entrepreneur in which town to hand that money to is very difficult. But if you can work together with communities who use crowdfunding, you can allow the crowdfunding to sort of do the due diligence for the government officials and allow them to come in and help support at the end and to really be able to work together. So that's really the end of my prepared remarks. I wanted to leave some time for questions if there are any. I want to, again, thank the State Department and thank our hosts here and our sponsors of this event. It's great to be here, and I look forward to chatting with many of you afterwards. So any questions?
Any questions at all?
One more thing I'll fill in with then is this discussion that was, I think, it's already been demonstrated by the state of crowdfunding in Slovenia remarks that were given earlier, is this concept, this incredibly important concept of reinvestment that's already happening here. And reinvestment from those people, meaning those entrepreneurs and those creatives and those people who gain early success with their campaigns and in building companies, and reinvest some of their time, reinvest some of the capital some of the money that they're earning in their new businesses back into this ecosystem. Because that will make all the difference in accelerating the growth of the ecosystem here in Slovenia and in the region. I can give an example from what I've seen happen in Mexico, specifically in Mexico City. 2 years ago, when I first went there to meet with entrepreneurs, Mexico City is a city of 20 million people. And so the entrepreneurs at that point were trying to find each other in this gigantic city, 20 million. And we're trying to figure out how they were going to begin supporting each other. And over the course of the last 2 years, they've established a neighborhood. It's essentially the startup and hipster neighborhood in Mexico City. And it is where a lot of the creatives and entrepreneurs are. And they're beginning this reinvestment cycle. So these early entrepreneurs who are getting venture capital now, or who have sold their businesses, or who are gaining this early success, are going back to the communities that they're from, and they're reinvesting in entrepreneurs themselves. And so this isn't charity. This is not giving. This is reinvestment. And it's a really important part of growing your ecosystem more effectively, more rapidly, and really strengthening it. So those was just one more thing to share and just suggest as a next step. So thank you again. Yes.
I have one question on scaling up. Yeah? Actually, crowdfunding is usually meant for, if I use just a Kickstarter, to kick the project up, or to, let's say, to begin with. And with my friend, I run one social enterprise now, which is actually now at the level on which we are able to function with several employees. But what we need now is to scale up, or we want to scale up. In this sense, such capital in this scene or in this environment is not at all enough. But the banks are still closed. What is the second or the third part? How to develop this? Let's say, is it government's, let's say, job to do it? Is it private capital? Is it partnership with private or governmental private partnership? So the second phase, most of these, let's say, crowdfunding projects here, which produced items and so on, are not in this phase yet. They're probably going to come to this level this year or next year. Yeah? But there are some social enterprises already in Slovenia which are scaling up. And the question now is where to go, where to find additional investment. Because this is not anymore now on about 100,000 euros, but it's about million and more.
Yep.
Thank you.
So a couple of different answers on that. Looking at the investment side of things, there are really, in the US, we legalized two versions of crowdfunding. One version, so that basically there's a type of investor we have in the US that's called an accredited investor. And to be an accredited investor means you have more than $1 million of money to invest in stocks, or a wealthy person. And so that's sort of the 1%, and then we have everybody else who are regular investors. And so they have basically taken two versions of crowdfunding. For accredited investors, if you're a very wealthy individual, you can invest any way you choose. Because the government assumes that you have money and you can make those decisions, and that's up to you. So that version of crowdfunding has been up and running for about 7 months now. The reason I bring it up is to address the scaling question and this issue of how much can you raise through equity crowdfunding. What we've seen already is this ability to, when that type of crowdfunding first began, the size of the round of funding that people were typically raising was between $100,000 and $250,000. 7 months later, just earlier this week, I received some emails from some platforms that we work with, and they had one had closed $1 million round, two others had closed $2 million rounds through this version of crowdfunding, through crowdfund investing. And so I think that that's a long way of answering your question by saying, with more experience in the marketplace, you will see more appetite for making larger, investments. And so I think that already, you begin to see that growth. I think that government can be part of the solution, but I think also finding new people to be what I would call micro angel investors. So there's sort of typical angel investors who are writing checks of 10 or 20 or 50,000 euro. But I think that what we're looking for now are who are the new micro angel investors who can write checks at 1,000 euro, at 2,000 euro, 5,000 euro. And so those are the people that you can go to, I think, to start looking at this new, being able to scale up. I know that isn't an immediate answer for you and what you need right now, but I think that's ultimately what we'll see is the ability to legalize equity and debt crowdfunding, and then begin to work with folks. I think people, and who are these people? These people are middle class, regular people, from Slovenia or any other country. People who already make decisions about investing in companies, or have mutual funds, or have savings accounts, and have a desire to take a small amount of that and make investments in businesses that they know and they use every day, or in entrepreneurs that they believe in. I think one of the most important things that we talk about too is the fact that crowdfunding is sometimes a bit of a misnomer because many times it's group funding. Many times it's 50 or 100 or 150 people who are coming together to support someone that they know. And so it's as much about, sometimes campaigns go viral, and you guys have had several campaigns that have done that very successfully, but many of the equity crowdfunding campaigns have 50 or 100 or 150 people, so it's much, much smaller, but at larger amounts.
I'm a professional musician and would like to ask you if you know for some good examples of this partnership between crowdfunding and government, I don't know, for example, Ministry of Culture, who would like to, they would like to invest, I don't know, some amount of their money instead of using tenders, kind of, I don't know, partnership between crowdfunding and, are there some examples? Because there are, of course, issues, how people can abuse it and, I don't know, so I would like to find some examples about it.
I don't have any examples that come to mind right now, but certainly you could see how that could be very interesting, right? To do a similar model with with artists and musicians and other creative cultural opportunities instead of companies. So to say, if you were able to raise a certain percentage of what you need from your fans, and then that the culture ministry could then match those funds. Yeah, that could be a really interesting model. I think there are, I don't know of a cultural example of how that worked, a cultural ministry example of that, but we've certainly seen it work in other sectors, the more commercial sectors, and I think they would be a really interesting model because it helps to reduce, I think, some of the maybe concerns of the cultural ministry, because what they're doing is they're just supporting someone who's already demonstrated that they have support.
Yes, but there are issues how, I don't know, someone can invest just to gain a higher amount from the ministry. So I would like to, I don't know, to find working example of it that has good criteria how to,
Okay. I'm sorry. I wish I don't have an example of that yet.
Yeah.
But I'll keep my eye out for it. Sorry.
Okay, I have a question.
Yes.
We all talked, and you also talked about these numbers of rate at which crowdfunding industry is growing, and it's two-digit number, of course. But recent statistical data that Kickstarter has published has shown that the rate of this growth has substantially diminished in the last quarter. Mm-hmm. So I'm now thinking about the Gartner cycle and how crowdfunding in total will reflect, or is crowdfunding now at the peak, or how big can crowdfunding industry get?
I don't know. I think that what we'll see is we may be seeing some early peaking from a kind of rewards-based crowdfunding, Kickstarter. Maybe some of the early adopters, maybe you're seeing a little flattening out could be one of many reasons. But I think that what we're still seeing significant acceleration with, at least in the US and in the UK, is on the equity and debt side of crowdfunding. And so also, I think if I walk down the street in a normal American city and ask 10 people what crowdfunding was, I really think only about 3 or 4 of the 10 would know what it is. And so I think we still have a lot of market to grow into with even just awareness. So I think that there's a huge opportunity still. I don't think we may be going through a bit of a lull, or maybe there's a slight slowing right now. But I just think that everywhere we go, there are rooms full of people like this who need capital for their businesses and are willing to do whatever it takes to get access to that capital because they're passionate about creating their company or creating their project. And so I believe that we have still a tremendous amount of growth ahead of us.
How do you prevent moral hazard in crowdfunding that connected problem? Isn't that a core issue why we have banks and investment banks. And
So with moral hazard, I mean, I think one of the issues we've talked about with governments on that level is what they're concerned about is how can they be the ones to pick the winners and losers. And so they're concerned about how do we pick. That's why a lot of times many of these funds that are allocated for entrepreneurs and for innovation may not be spent as much as are available, because the decision who do I choose of all of these can be very difficult. So I think that crowdfunding might actually help to reduce the moral hazard issue, because the government isn't picking, government is just following the crowd. I think the issue of why we have investment banks or why we have banks, that issue I would say is, 80 years ago when the securities regulations were written, about, in the US at least, about how you could sell shares in private companies. That was when you had to actually physically walk to a building to trade your stock shares with somebody else. Before telephone was in most people's homes. And I think that at that point you needed those kinds of laws in place, and you needed professionals, because there were only very few people who knew how to do that thing of trading shares and understood what that meant and understood securities laws. I think over time, though, what we've seen is as information becomes more easily available, that allows more and more people to make better and more informed decisions. So it started out by having banks, and then we moved to having investment banks, and then we moved to having venture capital firms, and then we moved to having angel investors, and now we're having sort of micro angel investors. Because of the internet, you have this access to near real-time information, and the ability for more and more people to make good investment decisions. So I think that there will always be a role for all those other institutions, and I think that that crowdfunding doesn't replace banks, it doesn't replace venture capital, but I do think that it has a spot, it has a place to fill its own role. Thank you. Thank you all very much.
Thank you.